Hey everyone, welcome back to Drawbridge Finance. My name is Levi Woods and I do not work in the financial industry, but I am a longtime investor and I do like to talk about investments. So I've created this channel to help encourage people to build their investment strategies, think about investments, and just build more wealth, really. I want you guys to get rich. So please, if you have any comments, drop them in the comments below and ask questions, and I will try to make videos to respond to them. Today we're talking about a question that came from Paul. He says, hey Levi, I love the videos. I'm your age and I'm kicking myself. I didn't invest like this earlier. Never too late to start, right? Of course, Paul, it's never too late to start. I mean, we can be dividend investors at any age. My mom really started when she was in her 60s and she is loving it. How diversified should my investing be? Right now, I've been focusing on Canadian banks because I'm just starting out, but how thin should I spread my money to diversify in the beginning? Well, really, what we need to do is think about overall account size. I've done videos before on diversification, and obviously diversification is super important. You need to not put all of your eggs in one basket, because when you do that, there's a greater potential that you will lose a giant portion of your money if one particular stock or equity goes down. So I've built a little chart to kind of show what I would think is an optimal range percentage-wise and individual equity-wise to be a portion of each account. And really it's determined by how much money you have. The reason that there's two columns is because there's two different investment approaches. The first one, on the left-hand side, this is where you would be completely self-directed, and you would be in an account that's probably charging around $10 to make a transaction. I've made videos on this before on how to calculate your minimum purchase. So I'll put a link up above for that video and you guys can watch that if you haven't already. If we look at a cell that says 6 to 10 dividend equities, that means we hold at least $1,000 in each of the 6 or each of the 10, some range in between. Each individual equity, say you held 6 of them, they would be somewhere in the range of 8% to 20% of the total portfolio value. I really recommend that you guys seek out professional advice. That is one of my personal rules, is seek professional advice. I am not a professional, but you can go to a broker, you can find one that will help you buy things. They charge a slightly higher fee, so your minimum transactions are going to be a little bit bigger. That's what this second column is for. So this would be a minimum purchase of at least $3,000 in each individual equity. If we look at an account value of like $10,000 to $12,000, you would only be able to buy 3 different equities because you have to buy at least $3,000 of each, which means that your weighting for each of those is actually quite high. When you start this account with your advisor, this is kind of danger zone, this section here. When you're in this like 10,000 to 30,000 range, you're not quite diversified enough, in my opinion. I like to have at least 10 different equities. You're going to see that diversification when you get to that like $30,000 mark or so, and then you can have at least 8 to 10 equities in there, 8 to 12 I've put on this chart, and that way if any one equity goes down, then you're not losing a giant percentage of your portfolio, you're just losing a small percentage. It's also why at the very top of this chart, when you have an account size that's $0 to $7,000, I personally would be investing in mutual funds or ETFs, and I would hold a couple of them. Now generally a mutual fund or an ETF is quite divided up, so you got a lot of diversification just by having that. So although it's 33 up to 60% of your account, within that there's a huge amount of diversification, therefore lessening your risk of loss. When you go through a broker, you kind of have to wait until you get to at least this $10,000 mark, because you're getting this $3,000 minimum purchase. You just can't get enough diversification. If you bought only 2 dividend equities and one of them went down, you could lose a good chunk of your money, and that's not what I want to see anybody do. I want people to have stable, reliable growth. So the goal is to get as much diversification as possible. Well, I hope this chart shed some light on how I like to diversify my individual accounts. Now remember, I have 3 different accounts. I have a TFSA, I have a margin account, and I have an RRSP. So each of them would be divided in this same way. If you guys have any questions, comments, please leave them below. Remember to hit the like button, it helps me a ton. Hope you're enjoying my channel. Please ask lots of questions. Let's get rich together.